Why don't we start with what everybody's talking about, just the momentum trade, big tech. Of course, Apple's part of all that. When you look at the charts and the technicals, do you see that having more room to run, or are we getting frothy, foamy, whichever word you want to use for it?
Well, I would say more room to run from an intermediate and long-term perspective. We do have breakouts in both the S&P 500 and also NASDAQ 100, but that's not to minimize the counter trend indications that we do also have at the same time, specifically for the NASDAQ 100. And this is a pretty new development. We have some counter trend signals that are really across time frames. So daily, weekly, monthly bar charts have these signals. And it just tells us that the very steady uptrend that we were accustomed to off of the October low from last year is probably not going to repeat itself, that we're in store for something that is dotted by more corrective phases and perhaps is a little bit more difficult to navigate. And that would then also suggest that perhaps that big large cap tech trade is going to falter here, at least in relative terms.
Okay, falter in relative terms. I want to bounce something off of you. Fundstrat out with a note, kind of looking at some of this narrowness in the market that has some people concerned. Mark Newton out with a note saying, in part, a falling U.S. dollar and yield scenario generally should be supportive for risk assets into the fall. However, given that more than half of the S&P's major 11 sectors have been lower over the last 3 months, technology domination has camouflaged the market from the skittishness being seen in many sectors. We were just showing a chart earlier, looking at some of those cyclical sectors moving quite a bit lower over the last 3 months. What do you make of this? What do you make of the narrowness of this rally, and what do you think that means?
Well, I can't argue with Mark. He's a great technician, and he's right in that it has masked the breadth behind the market deteriorating. Now, it really is more of a short-term phenomenon if you look at something like the cumulative advanced decline line. And a market that lacks breadth is just, it's a harder rally to sustain indefinitely, right? We've actually seen very strong gains of late from the likes of Apple, for one, and that's really contributed to the up move most recently. And it is reminiscent of times last year when we had this kind of narrow leadership. It is something that tells us that we should probably be patient when thinking about adding exposure, because as soon as we see a little downtick in Apple and Nvidia, my guess is that would be a bit of a hit on market sentiment and get the market to a place where it's a little bit more oversold, perhaps not fully oversold, but something closer to it.
I want to interject, Katie. I mean, you're speaking about market sentiment. I want to talk about Europe very briefly. We have futures at session lows here. Also, we're seeing Europe take a sharp turn lower. In fact, the CAC has turned negative year to date. What do you make of the action that we've seen in Europe since those parliamentary elections?
It's a very different chart, the CAC 40 versus the S&P 500. And I actually think the corrective phase there looks like it could be maturing. It seems a bit overdone to me in the short term on the downside. And we've also seen from Europe some interesting indications from the relative strength ratios versus US. The broader benchmarks like the Euro Stoxx 50, for one, have seen really turnarounds in those ratios. That suggests at least we'll get more inline performance for the balance of the year from Europe.